So a lot of the conversation, I feel like, around cryptocurrency that's in the mainstream right now is around Bitcoin and trading and how to kind of get into that world. But really, where the transformative potential lies in is in blockchain and the technology that underlies it. It has the capacity to transform pretty much every industry, but probably the most obvious one is the global financial system. For whatever reason, while we're used to communicating with our friends instantly and exchanging information, our financial system has not kept up in the same way. But with blockchain, we're on the cusp of this next generation of the internet, this internet of value, and I'm not going to try to explain that because we have an expert. So we're going to talk about what this internet of value looks like and what we can expect in a blockchain-powered future, and hopefully provide some insight into how you can incorporate blockchain into your own companies. So just to start, though, for people who may not be familiar with what Ripple does, Welly, can you share what it is that you do and how that relates to the potential of blockchain?
Absolutely. Hi, everybody. Thanks so much for coming. I think this is the last session in the conference. So
This is the last session.
last 5 meters of the marathon, so thanks for bearing with it. Delighted to be here. So just to introduce Ripple. So Ripple, I work for this company. It's been around for about 5 years. We describe ourselves as a cross-border payments software company. We do use open source blockchain technology in our software solutions. But just to be clear, we think about ourselves primarily as a payments company. We're really focused on developing payment solutions, primarily for financial institutions, to make cross-border payments more efficient. The company today, 5 years ago when I joined, there were about 15 people there at a tiny office in San Francisco. Today we're about 240 people, offices in US, UK, India, Singapore, Australia, Japan, still expanding. We have over 100 clients, primarily financial institutions, companies like Western Union, MoneyGram, Bank of America, Bank of Tokyo, a lot of really big financial institutions. And we feel very lucky. Yeah.
I bet. But before this panel, too, we were talking about the story of Ripple and how you came to be. And what's really interesting is that you didn't arrive at this payments aspect right away. So can you share that story of how Ripple became a payments-focused company and relate that to kind of the journey of what a startup would go through trying to figure out their own use cases for blockchain?
Totally, yeah. So we did not start as a cross-border payments company. We actually started as a company called Ripple Labs. We were kind of figuring out what we were doing. Basically, what we started out with was a commitment to understanding this open source blockchain technology, this thing called XRP Ledger. I think where we started was really understanding what is this type of technology really going to be good at? What are kind of the critical, unique capabilities that this had? And then let's just figure out what you can do with it, and then what is the best thing to do with it? So I think we understood pretty early on that this type of technology, it's really good at transferring value and exchanging value. There are a lot of things that you can transfer, a lot of things that you can exchange. So we looked at things like the securities market, so think about like stocks and bonds. We looked at the commodities market, moving precious metals. We looked at loyalty points. We talked to a lot of loyalty points companies. We looked at domestic payments. So I think I had my first conversation with a central bank in early 2014, just a couple months after I joined. I was a little surprised to have that, but pretty cool. And what we concluded was that cross-border payments, which was one of the kind of strands of spaghetti that we threw against the wall and it stuck, it was really the use case where we believed there was a lot of friction, meaning we could make a really big impact. And it was also a use case where we could make a big impact in a relatively short amount of time. All of these possibilities were super interesting. I think they were all valid, but they just weren't as big and weren't as near term as cross-border payments. That's where we landed.
Okay, and you even wrote a white paper about that.
I wrote a white paper.
Did you wrote the white paper? Or?
I co-wrote the white paper. It was a team effort, yeah.
Okay.
Yep.
All right, so now let's get to the kind of next generation internet stuff. What does an internet of value even mean, and why is that so revolutionary?
Yeah, so internet of value, I would say this. I think a great way to think about this is look at the internet of information today. Think about this concept of we can beam video from a satellite in outer space down to your smartphone right now, but if you wanted to move money cross-border, For most people, it takes 3 to 5 days. It's crazy. You can actually get money cross-border faster by just putting cash in your pocket, getting into an airplane and flying overseas. It's completely insane. And it's just this idea that what is normal in the internet of information today, that you can communicate with anybody around the world, practically effortlessly, 24/7, really fast, really cheap, you really don't have that same sort of thing when it comes to moving value. So I think internet of value, it's kind of hard to wrap your mind around, but it's this idea of being able to move and exchange value the same way that you can move information through the internet today. It's just not possible today.
All right, so it sounds like when we're talking about value, that the first thing that comes to mind is currency when we're using this word broadly. But is this technology transformative in the sense that, is the internet of value transformative in the sense that it will help us make more money and be more efficient? Or are there other real world use cases where it can really make an impact that's kind of outside of just making money or business use cases?
Yeah, so I think that even though we work with a lot of financial institutions, these big payments companies, these big banks, I think that it's really easy to lose sight of what we're actually trying to make more efficient, which is we're not just trying to widen the profit margins for a big bank. We're not trying to just make them look good to their customers. I think fundamentally what we're trying to do is make it a lot easier for these financial institutions' customers to be able to tap into the financial system, to be able to use the financial system. I think one realization that we had very early on is that going after individuals directly, what I mean by that is like bringing this technology directly to them is just a really inefficient way of going about it. It's a lot more efficient to work with working with existing institutions who already have hundreds of thousands or millions or even hundreds of millions of customers, make their lives easier so that they can then pass on those benefits to their customers. So like an example I think really resonates with me is if you think about just global e-commerce today. So think about big online marketplaces like the Amazons, Ubers, Googles of the world. By the way, none of this is private information. You can just go to their website. This is very obvious. If you want to participate in that marketplace, if you want to be a buyer on Amazon, if you want to be a seller on Amazon, if you want to be a driver for Uber, you're not going to do that unless, if you're a buyer, you can pay them to get the service. And you're not going to join it as a seller unless you can get paid for that service. I think being in first world countries, we enjoy really sophisticated infrastructure. We're really an overserved market in North America. That's not the case for a lot of the world. There are a lot of people who simply cannot participate in this global economy because they're not able to either transmit value or receive value. And I think that's a big barrier to growth.
Yeah, and I'm glad that you brought that up because one of my questions was that aspect of the underbanked and the unbanked. I mean, in Canada, we're so used to carrying cards and being cashless, but for a lot of the world, that's not common, and a lot of people aren't even part of the financial system. So what role can blockchain play in alleviating that, and what would the benefits even be? Like, why would it make a difference if someone is unbanked or underbanked, like, on a grand scale?
Totally. So I think I would look at this from two perspectives. I think one is, again, as a participant in this kind of global e-economy, just think if you are a seller in a third world market who wants to get into a marketplace, there's a great example of our CTO. He went on to Airbnb's user support forums and he found a case of a guy in Tanzania who's complaining that for him to receive money, to get wires, he's going to pay more in fees than he will actually receive money. That's crazy. It just doesn't make sense for him to participate in that marketplace. So I think from an individual perspective, this can have a meaningful kind of personal impact. I think from more of an institutional perspective, there's a big opportunity in these markets where they lack as mature an infrastructure as we do here in Canada and the US, to really leapfrog. I think you're seeing this right now. So think about these mobile wallets in Southeast Asia, which are just really becoming like a new bank account. And I think there's an opportunity, not necessarily for blockchain to replace that, but to really accelerate that process, to help these new kind of account systems speak to each other in a way that's more efficient than today's bank accounts can, we hope.
Hopefully. So, this all sounds like, an amazing place that we would be. But what are, I know, right? Just for businesses. But what are the hurdles to get to this Internet of Value stage?
Yeah, I would say that the one that comes up a lot is regulation. And I don't think it's so much this is an illicit technology and regulators are trying to find the right way to kind of battle it and defend against it. It's really just an education process. The reality is that regulators typically look at how market evolves, and they design the rules to make sure that it continues to scale up very efficiently. So they're generally not sitting in, they're not getting in front of the wave and making sure everyone's there for everybody else. You really have to work with them to evolve it, but it takes a lot of time. I think another aspect is just infrastructure. So making sure that to move to a world where you can move value in real time, exchange value in real time, a lot of processes just need to change. A lot of banks, a lot of financial institutions just aren't equipped to do things in real time. It just takes a lot of money and a lot of effort to do that. I think the example that I love to kind of refer to when I'm at work, kind of just pounding my head against the wall because things move really slowly when you work with big financial institutions, I like to think about the evolution of Netflix. So you think about how Netflix started, I'm sure Reed Hastings had this vision of being able to broadcast any sort of content to anywhere in the world, any device at a reasonable cost, just like I think many people are familiar with today. But he didn't start out that way. He didn't say, hey, I'm going to start this service once I can do all these things. He started out with sending DVDs in the mail. So it was this really basic kind of incremental step toward this very mature, sophisticated vision that really helped to let a business flourish and evolve as the industry evolves. So I think a lot of people just need to set expectations that it's going to take a long time for this to happen.
So then, does that mean we need to take kind of a if we build it, they will come kind of approach and just go ahead and start the infrastructure, or are we just going to take another 20 years to actually incorporate blockchain into our system?
That's a great question. I think that what's so important is that it's critical just to find out what are problems that people really care about that can be solved right now. And it may not be, again, the Netflix example. Everybody wants the real-time streaming of all content, to every device. But if you can't have that to start, find the people for whom the DVDs in the mail are really going to work. I think that's really key. It's what is an incremental benefit that you can bring to the market that will help grow the market.
Okay. So you are very outspoken in talking about how Ripple is built on an open source technology, and you are proud of this fact. Do you see this playing a bigger role in building an Internet of Value? And also, will this open source technology enable more companies to launch kind of in the same way that we saw with the cloud?
Yeah, I love that question. So yes, we try to be very clear that we are a private software company, and the solutions that we developed incorporate the capabilities of these open source softwares. Specifically, there are two technologies that we really focus on. One is called Interledger Protocol, and the second one is called XRP Ledger. Basically, the former is kind of like the blockchain technology. The latter is more of like a digital asset, like a crypto asset. And from our perspective, it's not possible for us to succeed to the extent that we can, which would be this kind of ubiquitous Internet of Value, as a private company, if the software that we're using is strictly proprietary. You really need something like the equivalent of Internet Protocol, which means that when we go to these financial institutions and we're selling our software to them, the fundamental software that's powering it and the fundamental capabilities that are really unique, that make our software unique, that is open source, which means that if a big swath of the market decides to use Ripple software, but another swath of the market decides to use software from a bunch of different providers, that's okay because it's interoperable. It'd be like the idea of if Google was using one internet protocol and Facebook was using another internet protocol, so you as a consumer would need to sign up for two internets, that's a big pain. That's something that you want to avoid. So it's this idea of like, not just network effects, but a network of network effects, that Ripple's success should lead to the success of other companies that want to kind of contribute to the development of this ecosystem.
Okay, and on the other side of the coin for that, we have seen some news reports occasionally that, for example, Ethereum was found to have some bugs in the wallet. How can we mitigate the effects of open source technologies for companies? Is this avoidable at all, or is this just something we need to be prepared for?
That's a great question. So I would just say, generally speaking, if anyone is looking to get into the space, if you're looking at which technologies to actually use for whatever use case you're solving for, just make sure you do your due diligence. Just because there is a technology that many people are using that's very recognizable doesn't necessarily mean it's the best technology, and it doesn't mean that it's even in kind of an inherently good technology. I mean that it's scalable and it's actually secure. I think it's safe to say, or from my perspective, being in the space for about 5 years, is that a lot of people are really religious about these technologies, and they will just defend to the death whatever digital asset that they're invested in or whatever blockchain technology that they're using. But a lot of these people just don't really give that much thought to, hey, is this technology actually scalable? Is this something that's exploitable? And really just again and again, there have been exploits that have come out for a lot of these really popular technologies. And a lot of people say, hey, it's a feature, not a bug. It's definitely a bug. I mean, some of these are critical problems that are really hard to solve for. So I would just say be careful what you're playing with.
Yeah, I totally agree. The crypto space can be pretty intense, especially when you're asking people which one to invest in. So for fintech companies that are looking into blockchain and trying to work with the banks to partner, what are the constraints that they're kind of dealing with when they're trying to have these conversations?
Yeah. So I would say for working with banks specifically, regulation is probably the #1 concern in their mind. So I think it was maybe like 3 or 4 years ago, BNP Paribas, they got fined between $9 and $10 billion for an anti-money laundering fine. It was by I think it was by the Central Bank of New York. That's a big concern for regulators. It's really hard to kind of price in the risk of these regulatory infractions into a service. They're just not going to work with something if they don't have strict regulatory clarity. So I think it's really important to make sure that you're at least mindful of that. Banks move slowly, not necessarily because they want to move slowly, but just because they really have to. I mean, there is a lot at risk, right? People's livelihoods that are at risk. So I think that's one. I think #2 is just keep in mind these are huge organizations. They have really old technology, and they're investing a lot of money. Banks don't use old technology because they like to, just because it's there, and it's very expensive to upgrade this stuff or swap out the old stuff and swap in the new stuff. So I just say, point of advice is just be patient with them. It takes a really long time. So one is patience. I think #2 also is, find a bank for whom you can solve a really big problem right now that isn't unique only to that bank, but really just find a customer you can really work with. For Ripple, it was Santander. Santander, it's the biggest bank by assets in Europe. It has about, I think, $1.2 trillion in assets. It is a super regional bank, so really big in Europe, Latin America, a little bit in the US. And we just, figured out that they had a big problem that we could solve very quickly for them. They've been great partners. They're now an investor in us. And they're one of the hugest advocates for Ripple. It's really cool. But I would say don't spread yourself too thin trying to do everything for every single bank at the same time. Find someone who's really going to work with you to solve these problems.
Okay, so you have a lot of experience working with working with banks all over the world. Would you say that Canada is set up to be a leader in this at all, or even just to get ahead of this before it's too late?
Totally. Guys, Canadians can do everything, first of all.
You're too kind.
So I think for Canada, what's especially interesting is that there is a lot of just cross-border trade coming out of Canada. It is a big domestic market, but just think there's so much cross-border trade that you're doing. I would just think whenever there's an opportunity relating to doing business with someone overseas, I would think that at least for the financial institutions, they should seriously consider this technology. It may not be Ripple, may not be payments, but this idea of kind of cross-border commerce, there will be friction. I think that there's a ton of potential for the banks, any other sort of company that does cross-border business in Canada, definitely worth looking at.
All right, so I would say probably 5, 6 years ago, every company was saying that they were mobile first. Investors were saying you need to be mobile first or else we're not investing in you. And we're not really saying that anymore because now it's kind of a given that you're mobile or that you're on the internet. Would you say that blockchain is having the same will have the same effect in that every company will be a blockchain company, or do some companies need to like kind of hold their horses and not just throw themselves into the blockchain just because?
Totally, yeah. I think it definitely makes me think of like the .com era, where you just say, I am X.com. And I think that the same thing is happening right now. They're saying, I am this company, but now I'm on the blockchain. And then everybody gets really excited, but you realize there's not a ton there. I would look at this from two perspectives. I think one is just be wary of a company that says, I'm a blockchain company. There are a lot of people whose maybe ambitions exceed expectation. I think the other way to look at it is that there are a lot of really good ideas, but timing is really important. So you look at some of the biggest internet companies today, a lot of them are just kind of reincarnations of business models that crashed and burned in the late 90s, early 2000s. There are plenty of examples of this. It doesn't necessarily mean that it's a bad idea. It may just mean that we're maybe a decade too early. And that's the reality. This thing is going to take decades to evolve, and use cases need to fit in the right circumstance.
Okay, and in talking about blockchain, a lot of the conversation is about smart contracts and currency. What are some other use cases for blockchain that perhaps don't come to mind right away?
I have no idea.
Too far in the future.
Yeah, I mean, I say that because, you know, Ripple, I think, again, a lot of people think about Ripple as like a blockchain company. We really see ourselves as like a cross-border payments company. I think we really, I'd like to say that we really figured out one specific application of this really kind of general, universal technology. It doesn't mean that, you know, we're geniuses. It just means, I mean, a lot of this was luck. You know, we tried a lot of different things. We picked one, and I think we succeeded at delivering against that. But I would say there's a lot of potential out there. We recognize that. The way that we're trying to try and either get in front of that wave or generate that wave is we announced, I think it was maybe two days ago, a program called Spring. It's pronounced, it's spelled X-P-R-I-N-G. All of our products say X in front of it. I don't know. But it's called Spring, and we are funding other companies that could develop useful applications, develop against other use cases that could be really valuable. And we just want to, again, kind of encourage this, that network of network effects, right? Not necessarily just investing in the Ripple cross-border payment ecosystem, but we are trying to invest in this broader ecosystem, hoping that there are going to be some home runs here, right? Just like the equivalent of the internet, really big .com companies, we want to make sure that we're investing in winners as well, and we are cultivating the right companies, given the resources to succeed.
It's really interesting that you're talking about this idea of network effects and kind of contributing to the broader ecosystem, because I do see parallels in the conversation with AI companies that I have a lot, in that, you know, even though I'm talking to them about their company, a lot of them emphasize that what they're doing could impact the broader ecosystem and could help other companies sprout up, which, you know, is kind of a perspective that you wouldn't expect from a private company that's trying to make money. For blockchain in particular, though, to move forward, is that what's required? Is it kind of, do we need to have more of an ecosystem approach in order to make sure we move forward, or can we kind of just work on our own in silos and this will spring up organically?
That's again, a great question. I think I would say like an open secret about Ripple is that close to 100% of our strategy has just been informed by looking historically at how the internet developed. So I would say it's really cool. I mean, if you just look at how Ripple evolved over the last 5 years, what we did in the market was really similar to what early internet companies, I mean, really, really early internet companies did to evolve. So I say that because I think there are two types of opportunities to help move this whole internet of value forward. I think one is you can either be a successful private company developing applications, making a lot of money from that. I think that's something that's definitely worth doing. We did that in part. But also it's necessary to contribute to the development of these open source technologies. So think about like the internet protocol. there wasn't one private company which kind of exclusively focused on the development of this, through patents against it, try to monetize it, because you just can't. Like there are certain aspects of the internet which are completely open because they effectively act as utility for all the participants in the ecosystem. So I would look at it from two ways. One is that if you feel like your skill set is around the core technology, developing protocols, working with consortia, developing governance models, I mean, this is critical stuff. Ripple has devoted a ton of resources, a ton of money into making that happen. Something like 50% of our engineering resources goes towards open source development. It's really hard. It takes a lot of energy. But also, if you see that there's a good opportunity, if the infrastructure is already there, if you can build an app and become a billionaire, do that. But tell me before you do it so we can put some money into it.
All right. So there's a lot of people, obviously, who are very hype about blockchain. But before people do that, do you have any advice for companies that are looking to work in the blockchain space or incorporate blockchain? What kind of steps should they be thinking about as they go about it so they're not just kind of going in blind?
Yeah, I get this question a lot. I think people who are interested in working for Ripple or just interested in getting into the space, they say, I'm not a cryptographic expert. How am I supposed to get in? And I just say that really isn't that important. I think one thing that I think Ripple recognized and became a competitive advantage really on is that a lot of the problems that blockchain solves for, it really requires like 2% technology and 2% blockchain, and then a lot of other stuff. And a lot of that other stuff is really rooted in industry expertise. So prior to working at Ripple, I worked for another cross-border payments technology company for 4 years. And a lot of our strategy was just me saying, hey, that didn't work over there. Let's try this instead. It has very little to do with the fundamental technology. Again, this assumes that the technology that you're using is sound. If you're not sure about that, make sure to spend some time on that. But people, I had someone ask me a question the other day saying they worked for one of the big 4 accounting firms, and how could they get into this market? And I was saying, don't look at it as like blockchain first. Look at these problems from accounting first. What are problems in the accounting space? The acute problems that are just really hard to solve today, and try and see if there are capabilities from this technology that can uniquely address that. That's exactly what we did with payments. We were looking at the market for cross-border global payments, and we were saying, what are the use cases where there's a lot of friction today? And if you dig deep enough, hopefully you're digging in the right direction. If you dig deep enough, you're going to find that there's going to be 1 or 2 kind of fundamental, mechanical, kind of root functional problems that blockchain or digital asset technology can address. And that is likely going to be kind of the focal point for where you can really apply your expertise. So whether you're in like the shipping business, if you're in mining, or if you're in e-commerce, apply your expertise first. Think about the blockchain second. I think that's important.
All right, so that's all the time that we have. Thank you so much, Welly, for providing your expertise. I believe he's doing a Q&A as well.
There's lots of folks in the room, so if anyone has any questions, we have a microphone. So please just put up your hand or stand up, and we'll get that mic to you. A packed room, but a quiet room. Oh, we've got a couple here.
I can yell. Oh, no, I can't. Sorry.
Here you now.
Is everyone awake?
So I have a question for you. Being in the crypto space, I've encountered, both through myself and others, Canadian banks seem to be really risk averse. They've closed accounts for businesses and individuals. Quadriga, Canadian Exchange, has had a lot of issues too with, they've had to pause payments for a while. Now, it has the power to transform the sector, but there's also issues around KYC, AML, and there's risk aversion around that. Plus, you have legacy systems that are from like the 80s, 70s. It's costly. There's been banks that have tried to change it, and it's been a cluster F that happened quite recently. Just wondering sort of how do you come in? Is it the fact that you're not marketing yourself as crypto? Like, how do you start changing the system, particularly in Canada? I mean, we tend to have a good regulatory environment. We're a little friendlier than some jurisdictions. just wondering how you would come about that, because I feel, Canada, we pride ourselves on being sort of like a innovation-based economy. So how would you go about that, and are you doing that in Canada now?
Yeah, so I can speak with respect to financial services and payments, the stuff that we're doing. I'd love to hear, what you're doing and where you're seeing problems. I think with respect to cross-border payments, what's been really effective is you come in talking about payments first and then blockchain next. I think one problem that really delayed the evolution of this industry is that a lot of like blockchain crypto companies initially, they came in with the explicit intent of subverting the financial system, saying they're going to tear down the banks, they're going to tear down the Federal Reserve, screw the regulators, we're going to replace it all, good luck with you, we're going to be the new champions of the universe. That's not a great start to a conversation. When you talk to those banks and talk to those regulators and you say, hey, open up a bank account for me, or hey, why are you fining me for doing something that doesn't fit within your regulatory framework? Don't do that. They're going to say, well, aren't you the guy who said that you were going to put me out of business? That's just not the right way to go about it. And I'm not saying that that's what many people are doing today, but there were some bad apples who really, that's just how they behaved. Our regulatory people were in the same room with them, with the regulators. It's really awkward being in the same room. It does not set up for good conversation. So I would say, generally, what really helps with conversations, engaging with the banks, think about who their customer is. This assumes that the problem that you're solving for relates to the bank, but just speaking from our experience, it was talking to the bank, understanding who their customer is, and understanding what problem that customer had, and what was really limiting the bank from delivering that capability to that customer. And what followed that was saying, okay, well, if these are kind of the pain points that you have, this is the problems that you have, here's a solution that we can provide, and oh, by the way, blockchain is part of it, and they say, whoa, 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 blockchain, this looks really interesting, but this whole blockchain thing, what does that mean to my compliance department? Then we talk to our compliance department, and this is, speaking from Ripple's experience, we're a very benign company, right? We very much want to work with people and collaborate. It's very easy to have that conversation, but I think it's very difficult to have the conversation if the focal point is blockchain, kind of what is it, what does proof of work mean, who are these miners, that's a really tough conversation to have. Whenever people start talking about that, I say, you know what? I actually love talking about that. It's super interesting. But it's more of like a philosophical and religious conversation. It's really less of a practical one. I'd much rather talk about like, what is going to be the impact of Dodd-Frank going to be on KYC requirements for a bank? How does blockchain technology help solve for that? How does access to account, which is a part of PSD2 in Europe, how does that affect bank APIs, and how can we solve for that? How does Basel III's effect on liquidity constraints for banks? How does that hinder banks today? How could a digital asset like XRP make that easier for them to deal with? But if you're in the business of subverting the banks, well, that's a pretty steep uphill to climb.